I risked $40 to make over $200. In this video, I'm going to explain risk and reward to you in a way that will allow you to spot these same opportunities when you're trading. Hey, what's good? Matthew Manuel here, and I've been trading for the past 5 years. This is something that I wish I had learned earlier in my trading journey. It has made a huge difference in my trading, and I know it can do the same for you if you haven't already applied it to your trading. If for some reason you haven't already, be sure to subscribe and hit the bell notification icon so that you don't miss any future content. Also, while you're down there, be sure to smash the like button. It really helps to support the channel. I'm just going to take my Instagram and leave it right here. Do with it as you will. Without further ado, let's get into the video. In this video, we're going to take a look at the trade I was talking about, and go over risk and reward, and talk about how tapping into this can be really helpful in scaling your account. All right, so here we have the trade in question. As you can see, I purchased NVIDIA 480 puts. I paid $134 in total for them, and when I sold them, I came out with $338. So right there, that is a $204 profit. Right here, you can see I bought 2 contracts. I paid 68 cents per share for a total cost of $134.06, and I sold out for $1.69 per share for a total of $337, just under $338. And you may be thinking, hey, you said you risked $40, but you paid $134 for that trade. One thing you have to realize, looking at risk and reward and all that, is first off, you should not enter a trade without a profit target and a stop loss. So with that in mind, I paid $68 for those contracts, and for me, if those contracts came down to 48, I would have sold out and I would have accepted it as an L. So right there, I already have my stop price. If the contracts that started out at $68 fell to $48, I would be stopped out of the contract, and I had 2 of the contracts, so $20 each contract is $40 of risk. So that right there, that is how I risked $40. And along the way in the trades, I had different points where I would watch and see how the stock reacted to see if I was going to take profit there. It didn't reach my furthest profit target, but it went far enough for me to 5x my risk. And this is where your risk to reward ratio comes in. So you see, for instance, trade ended up playing out to be a 1-to-5 risk to reward ratio. I risked $40 and I made 5 times the amount at $204. So if you think about it, I can make that trade 5 times and only need to be right 2 times in order to be profitable. So just to give you an example, say I have $1,000 and I'm willing to risk 200 in this trade. The numbers are proportional, but it's scaled up. So take 40, multiply it by 5, take 200 and multiply it by 5. $1,000, I'm willing to risk $200 each trade. I miss out on the first trade. All right, now I have $800 and I'm wrong once. I miss out on the second trade. I have $600. I'm wrong on 2. I miss out on the third trade. I'm now left with $400. I hit on the fourth trade with $200 and 5x that, and I earned 5 times what I risked. And right there, I went from having $1,400, that $200 turned into $1,000, and I still had a remaining $200. So now I'm sitting at $1,200, and then I do it again. So now I'm sitting at $2,200, and I only got 2 out of 5 trades right. That is the beauty of trading lower risk to reward. So now that you just saw those numbers and you know how that works, there are things you can do to utilize this, especially on small accounts. It works on large accounts, but I want to talk about small accounts because a lot of you that really reach out to me, message me on Instagram, a lot of you that I really get to connect with, you have smaller accounts and you want to know how you can grow it. Paying attention to your risk to reward is how you do it. So for instance, the trade that I made in this video, that would work for a $500 account size. That would work for a $400 account size. For a $400 account size, that is risking 10% of your account to make 50% of your account. One of the beauties of calculating this and looking at this and going in, having a stop loss and a profit target is you can see what is possible to grow your account, and it gives you confidence in knowing, hey, I can go in and make these trades because I know where to cut out and I know what my potential is. I know how many times I can lose. I know how much I need to win, and I don't necessarily need to win as much as I think I do in order to be profitable. I just need to let my wins be big and my losses be small. When I was able to finally tap into this, it gave me the confidence I needed to not worry about my plays. It gave me clear-cut direction, and it made things a lot easier for me. I truly hope this helps, family. If you have any questions or comments, don't hesitate to leave them down below in the comments. If you enjoyed the video or learned anything, be sure to smash the like button and share this video with a friend. If for some reason you made it this far and haven't already, what are you waiting for? Be sure to subscribe and hit the bell notification icon so that you don't miss any future content. And last but certainly not least, thank you so much for watching. Matthew Manuel signing off, and I want to change your life.